In its literal sense, kafala means responsibility or surety. Legally, it can be defined as making the guaranteed person's liability a joint liability of the guaranteed and the guarantor at the time of demanding compensation. Thus, any individual property, object, or other item that can be demanded from the former can be demanded from both parties. The legitimacy of guarantee contract or kafala contract is derived from Quran. To understand the structure, let's assume there is a person who needs funding. We'll call it debtor or borrower. The borrower finds a creditor or a bank to be able to fund the requirement. The bank asks for a guarantor. The borrower finds a person to be a guarantor and discusses the need. The guarantor agrees after discussing with the bank. The bank provides contract for funding and a contract for guarantee. All parties sign that contract to the bank's satisfaction. Banks provide the funding per the contract, and now borrower is obligated to pay as a debtor while the guarantor is obligated to pay because of the guarantee contract. In case of default, creditor or the bank has the right to request any of the two parties for the money. Principle of Kafala. Contracting parties. The contracting parties in Kafala are the guaranteed, guarantor, and creditor. The condition for the person whose debt is to be guaranteed is that the person must be capable of repaying the debt, with the exception of a deceased individual. Guarantor must have legal capacity to enter into a contract. The creditor should be known to the guarantor and should be present in person or through representation while signing the contract. Kafala can be effected upon all claims relating to the enforceable rights of the creditor, such as amount of loan, price of an item sold, rent, etc. However, guarantee is not permitted in trust contracts. For example, agency contract are contracts of deposits, unless such stipulation is intended to cover cases of misconduct, negligence, or breach of contract. The agency and personal guarantees cannot be combined in one contract. The institution can ask a customer to provide one or more guarantors. Personal guarantees, if provided, can be divided into two types. One is recourse guarantee, where the guarantor has a right of recourse against the debtor, and other one is non-recourse guarantee, where the guarantor has no right of recourse. The guarantee can be for a fixed duration. One thing to note is that according to OSFI, one can neither take any remuneration for providing a personal guarantee, nor pay commission for obtaining one. The guarantor is, however, entitled to claim any expenses actually incurred during the period of a personal guarantee. On the other hand, prominent Sharia scholars are of the view that it is permissible to charge a fee for providing a guarantee in modern commercial Islamic finance. The creditor is entitled to claim the amount due from either the debtor or the guarantor. A valid guarantee may be given for debts, the exact amount of which is unknown. Similarly, a valid guarantee may be given for a debt that will arise in future. Key applications of Kafala contract include letter of guarantee, letter of credit, asset financing like buying a car or house or a land, whether personal or business use. Thank you very much for watching. If you have any questions, please email us. Subscribe to our channel for future videos on Islamic banking and finance. Thank you very much for watching. Bye for now.